What's up everyone, it's Karthik with MoneyVest. So Palantir and SOFI is going to be the topic of discussion here in today's video. I've got average cost bases for both Palantir and SOFI among all investors out there, and over 70% of investors are profitable in both SOFI and Palantir stock. And I'm also going to lay down what I believe to be the bull thesis for those two companies, and of course go over to the technical analysis in this video as well. So hope you all enjoy this video, find it helpful. If you do, make sure that you drop a like and don't forget to subscribe to the channel. Again, if you're joining us for the first time, link's going to be down below if you are interested in joining us on our MoneyVest platform, including access to all the Discord channels, the trade alerts, trade ideas, as well as members-only private videos. We've got a brand new feature coming up very soon that's going to give you an idea of the market thresholds and the current status for the market, giving you a bird's eye view for individual stocks and for indices and for different sectors as well. So link's going to be down below. There is a 16% annual discount that does expire at the end of this month. So today pretty much is August 1st. So today is the last day. If you want to sign up, you can with the link down below. We'd love to have you on board with that annual discount of 16% where you can save 2 months. So Palantir trading up almost 2% on the day, just a little bit over $26 per share. And SOFI on the day here also up over 1.6%, just over $7.54. So there was actually a report on Motley Fool that I wanted to go over, why I just sold all of my SOFI stock. This is a new report, literally just came out, I think, just today. And this is from an analyst, why I initially bought SOFI stock. Now, before I get to why I just sold SOFI, let me first explain why I initially bought the stock in the first place in 2021. So I'm assuming if they bought in 2021, they haven't really made much. In fact, they lost money because 2021 was over here when the stock was in the well over $17, $18 range. And of course, now it's trading down to under $8. So I'm assuming that they have lost their share. Essentially, they've lost money on this trade consistently over the last 3 years. So many of the reasons I like SOFI in 2021 still hold. SOFI remains innovative. It's one of the world's top fintech companies, and SOFI continues to introduce new products and services regularly. Memberships are growing rapidly. The lowest year-over-year members growth in a quarter since I bought the stock has been 44%. So very, very strong numbers here. Revenue has soared. SOFI has generated profits for 2 consecutive quarters. What's the problem? All the revenue has risen significantly. Growth hasn't been nearly as strong as I hoped. Worse, SOFI's revenue growth is slowing. The company projects 2024 adjusted net revenue will only be 15 to 17% higher than previous year's revenue. So it's actually quite interesting that this analyst, this person, whoever wrote this article, so if you come over to this, so Keith Spites, this is again July 31st, literally this morning at 5:50 a.m. It's interesting that they bought in 2021, they sold it for a loss, but now the growth rate, because the growth rate is slowing down, they're now starting to look at this as not the best stock. Well, folks, the thing is, this is what happens with companies that are growing at a rapid rate. The growth rate will slow down. It's not a growth rate that's going to go on forever, right? So this is not a growth rate that's going to go on forever. It is going to come down. So to sell and get out of this position just because the growth rates are slowing down, adjusted net revenue is coming down, you do realize like how sometimes how crazy investors and analysts become, right? So in the constant comparison, we tend to forget the absolutes. I think that can be a nice quote. In the constant comparison, we tend to forget the absolute. And what I mean by that is nobody is appreciating the fact that net revenues for SOFI would still grow double digits, 15 to 20%, despite seeing such massive increases in revenue and products and members. But we are comparing now to previous years. And that's what happens when analyst estimates come out. People start comparing to what they actually reported versus what the expectations were. And if they're reported less than expected numbers, the stock price sees a bad rap, even if that number still posted growth year over year of 20, 30, 40, 50%. But nobody bats an eye just because they've missed some analysts' expectations. And that is a very interesting concept because we talked about this during our analysis on Meta, on Enphase, on a lot of companies where, yes, the companies were missing expectations, but at the same time, at the very core, the business was still growing. The business was still up. And the interesting thing is, from what I believe, that SOFI's runway over the next 5-7 years Revenue growth is going to be 15, 17, 18%. Yes, it's going to come down, but where is that growth going to go to? Bottom line profit. Net income is where the main business is going to be now, because Anthony Noto has emphasized on his idea that, okay, we're going to be GAAP profitable this year. The company is going to be potentially GAAP profitable. Very nice net income that's going to be scheduled or expected by the end of this year. And that's going to accelerate moving forward from SOFI. So this right here is the cost basis right now. 71% of shares are currently profitable with an average cost basis of $7.27. Closing price is $7.54 for SOFI. And if you come over to some of my sort of bull thesis on this company, Anthony Noto said that rate cuts are incoming, which is going to be a tailwind. He didn't say rate cuts are incoming. He said that if we do see rate cuts, that's going to be a tailwind for the company. So in my opinion, that is a very good sort of potential bull thesis for SOFI. As discussed in my previous videos, they've got a very good, better credit quality borrowers. So again, their delinquency rates are really low. We're talking less than 0.1, 0.2%. Accelerated adoption, we've already seen members going up, products are going, so everything's moving in the right direction. All the bar graphs, as we showed in the presentation, everything nicely accelerating and increasing year over year. Turning the corner towards GAAP profitability, that's actually one of the biggest reasons why institutional investors will now start to feel a little bit more interested in SOFI. So I will put that an asterisk here because that is perhaps even more important and more interesting than anything else, right? So that's number 4. Number 5 is going to be better loan mix. So as I mentioned before, they've got a good combination of home loans, student loans. And then we've also got, personal loans. They've got a nice little mix of all these different types of products that they can offer in different environments. Excellent balance sheet, good, more cash and more investable securities than debt on the balance sheet. Great leadership. So Anthony Noto, again, moving in the right direction with the company, and it does have a long-term moat, plus a very good story that I think comes under subjective analysis, a little bit more towards the qualitative piece instead of quantitative, right? Quantitative is all about the numbers, as we already went over, balance sheet and, GAAP profitability, and of course, accelerated adoption through members and revenues. But really, at the end of the day, we also want to look at the company's story and what type of moat the company really has. And in my opinion, this is a stock that offers very low risk to high reward potential, because right now the company's overall market cap is just under $8 billion. Yes, it's trading at 72 times 2024 earnings multiple, which can be argued at a little bit more on the higher side, but nonetheless, the risk reward is still pretty solid, and fair talking 3 to 5 years out. Support level is going to stay put at $6.39. So this right here is going to be that level to watch all the way down to inside this green rectangle for SOFI. Roughly around $4.50. So I want to be very clear. I believe SOFI has got a ton of potential long term. I'm continuing to kind of accumulate little by little. I will be building out a position that is much bigger than what I currently have, because right now it's practically nothing, but I will be buying more shares. 640 is kind of like that first area of support that I would be interested in buying more shares, all the way down to, of course, if and when we get down to low 450s, that's when I would be a lot more aggressive, because like I said, the risk reward is what really is attractive for SOFI at these prices, with of course a massive resistance here sitting for the company in the $9 to $10 range for the stock as well. Now coming over to Palantir. So Palantir stock price prediction, as Microsoft's CEO names it a top pick. So that's interesting. So let's take a quick look on what really happened here. So despite endorsements by prominent CEOs, Palantir will demonstrate more diversification in revenue streams if it wishes to convince Wall Street analysts right now. Let's see if you can find it. There we go. So these attempts haven't gone unrecognized, with big industry players as Microsoft CEO Satya Nadella called Palantir a leader in their industry during the July 30th fourth quarter earnings call. So the numbers of paid models and service customers has more than doubled quarter over quarter, and we are seeing increased usage by leaders in every industry, from Adobe, from Bridgestone, Novartis, and Palantir as well. So Palantir, as we already know, also has its own bull thesis. This right here is the current cost breakdown for Palantir's stock. $24.41 is going to be that average cost basis, with over 76% of investors currently profitable on the stock. And this right here are going to be some of the bull case thesis for Palantir. And potential rate cuts is also going to be a tailwind for Palantir as well, because it does depend very much on financing, although it doesn't really have a lot of debt. But just from a present value of all future cash flow standpoint, just from a valuation standpoint, rate cuts coming down is most likely going to be good news for these speculative sort of companies that are a little bit trading at higher valuations, right? It's going to only benefit them. We got the artificial intelligence wave. So just like SoFi has a wave riding on with fintech, financial services, technology platform, Palantir also has the AI wave as well as the data science wave. These are the two big reasons why Palantir is doing so well, is because they're utilizing artificial intelligence and synthesizing data, making sense of that data, and solving two primary pain points of companies. That is how to lower revenues, how to become more efficient, and how to grow revenues at the same time, right? So how to lower expenses and cost, and how to increase revenue. So those are the two primary things that most businesses are constantly focusing on, right? As a business owner myself, I'm constantly looking at ideas, looking at ways how I can become more efficient, my team can become more efficient, we can lower our cost, and we can increase our revenue. That's the bottom line, because that's how you will increase your margins consistently. That's where most of the focus needs to be, and Palantir allows for companies to focus on that and do that. Excellent balance sheet, as I said, little to no debt with plenty of cash on the balance sheet, very good leadership from Alex Karp, of course, and the company also does have a very nice moat and a story as well that it can focus on. So that, again, is still there, excuse me, and valid for Palantir as well. Coming over to some of the technical analysis. So Palantir continues to be inside this uptrend of higher highs and higher lows. So we've got a nice little ascending support over here for Palantir. And a very strong support sitting roughly at $21 with a very strong resistance sitting at $29 to as much as $30, $31, kind of aligned with that, pretty much all-time highs for Palantir. But this is a very nice uptrend, and if it does end up, let's say, down to $20, $21, I would be a little bit more aggressive and more excited to buy more shares at those prices. But this right here is going to be that near-term higher low for Palantir. And I also shared both of these companies in my 37 stocks and ETF shopping list, including my nibble buys, light buys, heavy buys, aggressive buys, no-brainer buys, and my fair value. So that's also going to be available with a link down below if you want to get access to that. But yeah, so overall, I am confident in both companies. They're both gap profitable. They both got excellent balance sheets. They both got a nice story with a very good economic moat. Valuation is a concern for perhaps both of those companies, but we're really talking long-term, say 3, 5, 7 years out, as the companies turn the corner towards profitability and continue to be more and more profitable with higher margins. Valuations are going to come down, and there is a possibility there's more institutional involvement in both of these stocks with some more potential upside and targets to follow. So $26 resistance for Palantir around these levels, actually $29 to $30, with a very strong support here in the $20, $21 per share range, all the way down to a much stronger support of $13.50 for Palantir moving forward. So hope you all enjoyed this video and a complete update on these two companies. Let me know your thoughts down in the comment section below. As always, if you enjoyed it, found it helpful, make sure that you drop a like and subscribe to the channel. Let me know your thoughts down in the comment section below. As always, happy investing. I'll see you all in the next video.